Good evening, my dear students. So, welcome to today's session. And today we'll be covering chapter number 8. Students, I also missed teaching you guys. So, let us quickly start with this chapter, which is chapter number 8. And the name of the chapter is Analytical Procedures. Analytical Procedures. So, before understanding what are analytical procedures, before understanding what is the relevant standard SA, let us just try to understand a very general concept. Students, concentrate on this example. Suppose you are auditor of XYZ Limited, right? XYZ is your client. And you are verifying the rent agreement. Why? Because you want to check the rent payments that have been made by your client XYZ Limited, right? So in case scenario 1, what you do is you just look at the rent expense account and you see that for every month 50,000 per month has been paid by your client, and you check the rent agreement, you check the expense account, you check the bank statement, and you found that everything is correct, right? This is one case scenario, right? On the second hand, like the second case scenario, along with this, what you did is you check the industry data. That is where XYZ Limited has taken the premises on rent. You checked what other companies in the similar industry and in the similar area, what rent they are paying, right? So in one case scenario, the auditor has checked the rent agreement in detail. Basically, he has done test of details. Now, what is test of details? I expect that is clear because we have done that in detail, right? So auditor checked in detail and he found that everything is true and fair with respect to rent payments, right? On the other hand, what he did is he also checked the rent which is being paid by other companies in the similar industry and in the similar area. So I can say other things remaining constant, same as XYZ Limited, he checked the payments being made by other companies. And he found that those companies are paying just rupees 10,000 per month for a similar area. Now tell me, just try to think, is this unusual? Is this unusual? Why? Yes, because your client is paying 50,000 and for the same area, for the same industry like nearby area, the other companies are paying only 10,000. Quickly answer me. Is this identification of unusual thing, is this possible here in case scenario 1? In case scenario 1, was this identification of unusual? Something is unusual, something is not correct. Is this possible? Quickly answer me. So, this is not possible unless and until auditor do some analysis. What is analysis? He just took the industry data and he compared that industry data with his client rent payments. Clear so far? So I can say when auditor did some extra analysis, he was able to identify certain unusual state of affairs, or I can say any mistake, or I can say any mistake. Clear? Right. Aditya, Vanshika, they are saying that no, ma'am, it is not possible in first case to identify such unusual fluctuation or state of affairs, right? Let us take another example. Suppose, again, for XYZ Limited, our auditor, he was taking the wages. And what he did is, in the first case scenario, he checked the wages in detail. He picked up the wages register and he just saw that, okay, like whatever amount has been paid to the workers, at what rate wages have been paid. Maybe he checked the register, he checked the cash book or the bank book, and he was somehow satisfied that payment has been made correctly, right? Now let us take the other case scenario whereby auditor checked this, let's say on sample basis, right? He checked this on sample basis and along with that, he performed another analysis. Now what is that? Let's say he analyzed the relationship between wages and say sales. Wages and sales. I hope this is visible. Relationship between wages and sales. And when he was analyzing, he just found that this year wages constitutes 50% of sales. However, during the last few years, it was 30%. Now just tell me, when the auditor was analyzing this fluctuation or this unusual relationship between the wages and the sales was not identifiable, right? But now since he has seen this, that last year also, the wages were 30% of the sales. Now when he calculated this year, he found that the wages have become 50% of sales. Now being an auditor, applying professional skepticism, a question will come into his mind that why this? He may think that the company has shown certain dummy workmen. So he may then again perform test of details. I told you that he has checked on sample basis. So we can see that after performing certain analysis, auditor is able to identify certain unusual state of affairs, or I can say inconsistent relationship, right? And this analysis is nothing but analytical procedures. Clear? Quickly answer that whether this small concept and a very general concept, whether it is clear or not. We have just seen that after performing some additional analysis, apart from the routine checking, what was the routine checking here? Test of details, that is, he was checking the agreement, he was checking the expense account, he was checking the bank statement. What was the routine checking here? That he was checking the registers, he was checking that cash book and bank statement, whether proper entries has been done or not. And he did certain extra analysis with respect to this. He compared the entity's data with other industry, and here he compared the ratio of wages to sales for the previous year of the same client, right? And he found certain unusual state of affairs, which by routine checking, identifying those unusual or fluctuations was not possible. So quickly tell me, is it clear so far? So we have seen that After doing certain extra analysis, apart from the routine checking, the auditor is able to identify certain unusual state of affairs. Okay. Students are saying, ma'am, crystal clear. Good. Okay. Now, let us try to understand what is the meaning of analytical procedures. And as I always start by first breaking the entire term into two parts and by explaining you the dictionary meaning first, right? So quickly tell me the synonyms or one or two words for analytical. What is meant by analytical procedures? Quickly, I need answers. Students are saying clear, but answer me, what is meant by analytical? Dictionary meaning I have already written. I want a word or two that what in your, no, like as per your understanding is meant by analytical. So let us start. See, the dictionary meaning says analytical is relating to or using analysis or logical reasoning. Okay? Now what is meant by that? See, the auditor, what he did in our first case, he compared the rent paid by XYZ Limited with the rent paid by industry, paid in industry. Hana? So what is he doing? He's relating something and then he's applying his logical reasoning that see, our client and the other company in the similar industry, similar area, see, they have taken same kind of premises on rent. And our client is paying 50,000 and the other company is paying 10,000. Why so? Now professional skepticism, why so? Right? A question will come in his mind. I can say he is analyzing or he is applying logical reasoning that see, same area, same client. So why the difference? Let's take another example. The relationship between wages and sales. He expected it to follow the trend of last year or the previous year. That is, he thought it should be near around itna percent, right? But he found that it is actually 50%. So what is the auditor doing? He is relating and then he is applying a logical reasoning. He's relating wages to sales and then he's analyzing it. He's analyzing that ratio. So clear analysis. You are doing some extra thinking about something relating to or using the analysis or logical reasoning. And procedures, the other word is procedures. And this we are doing from our first lecture that auditor always perform audit procedures. So the dictionary meaning says series of action conducted in certain manner. So while analyzing whatever procedures, whatever steps or whatever action the auditor will undertake, those are analytical procedures. This is just for your understanding, not to be written in your exam, right? Now, what is to be written in your exam and what is the definition of analytical procedures? Now we will see that. I hope so far it is clear. See, just listen to the example which I'll be explaining. That will help you in understanding. Plus, I'm sure in learning the definition of analytical procedure as per SA 520. As per SA 520. Students, if you remember, whenever analytical procedures came, the word analytical procedure came in your chapter number 2, in your chapter number 3, I always told you that it is covered by SA 520. and we will be doing it in detail in chapter number 8. So now that moment has come. We will be deciding analytical procedures in detail and entire essay 520. The name of the essay is what? Analytical procedures. Very simple name, right? Try to understand the example. As I told you, this will help you to understand the definition as well as help you in learning, right? Now suppose the total salary of the client, suppose I am the auditor in this case, the total salary salary expense that has been shown in the P&L account is rupees 5 lakhs. Clear? I ask the management that management, please tell me the number of employees right? And then I ask the management, please tell me salary per employee. Very logical, na? I have to verify the total salary. Okay? So one way is what? I check each and everything in detail. I am doing the vouching. I am checking each and every salary, like the salary receipts, the salary, whatever the employees are signing, the salary register, the bank statements, the list of all the employees. One option is I do that. That is, I do the routine checking. Second option is this. I ask the management to provide me with the number of employees and to tell me the salary per employee. Clear? The management said that there are total 500 employees and we are paying 1,000 to each employee, right? Students, why have I asked number of employees and salary per employee? Because as an auditor, I believe that there exists a relationship between number of employees and salary per employee. Why? I'll repeat this. When I as an auditor, I have to check the total salary. I thought that in order to check salary, I'm sure that there is a relationship between number of employees and salary per employee. So I asked this data and I analyzed this data, or I can say I evaluated this data. Clear so far? So I can say this is a financial information. This is a financial information. Why? Because this is in rupees, right? I can say this is a non-financial information. The number of employees or anything in numbers, that is which is not in rupees, is what? Non-financial information. And salary per employee is again what? A financial information. Clear? So what I as an auditor am doing, I am evaluating the financial information. Evaluation of what? Financial information, right? How? By considering the relationship among both non-financial data and financial data. Non-financial data and financial data. So, itna to we are clear that analytical procedures are evaluating the financial information. How? Through considering the relationship between non-financial information and financial information. Clear? This is just 70% of your definition, and the definition says evaluation of financial information. Total salary is what? It is in rupees. So it is what? It is financial information. And I as an auditor at this moment I am evaluating this information that whether this 5 lakhs is correct or not. Okay? So evaluation of financial information, how through analysis of relationships. Students, tell me, can I say that when I have to consider this rupees 5 lakhs, I have to evaluate this financial information, which is salary in this case. Can I say that I'll take rate of depreciation and I'll multiply it by salary per employee? Or I'll take number of defects in the products and I'll multiply it by the salary per employee? No. Why? Because we believe that there is no relationship between the rate of depreciation and the salary per employee. There is no relationship. Or the other example was what? Number of, say, defects or customer complaints. There is no relationship between this, right? So I'm considering only the possible relationships. So the word used in the definition as per essay 520, the word is plausible. And the dictionary meaning of word plausible is possible or believable. That is, you believe as an auditor that there exists a relationship between the number of employees and the salary per employee in case you have to evaluate the salaries. Or you are sure that this relationship is possible and these are not possible. So the word used in the definition is plausible and the dictionary meaning is possible or believable. Among what? Among, am I considering only the financial information? No. Among both financial and non-financial data. Among both financial and non-financial data. To understand and learn this definition word by word, just keep this example in your mind. You are evaluating the financial information, which is salary in our case. How? Through analysis of any relationship? No. Only the plausible relationship. Among only financial data? No. Among both financial and non-financial data. So let us just look at this example again. Evaluation of what? Financial information. Through analysis of plausible relationship among both non-financial and financial information. Clear? I'll be taking you through the module so that you are able to, understand this in detail. But is it clear so far? Is it clear? Just quickly send me the replies. And students, if you remember, we did this, the audit procedures. So now we are discussing this A in detail. A is what? Analytical procedures. So we are discussing this analytical procedure in detail. Clear? Clear? This is just one part of the definition or the concept about analytical procedures. Quickly tell me whether you are able to understand and learn this definition also. Vedashri Singh, very easily understood and learned also. Now the second part. Suppose the total salary was rupees 6 lakhs. This is the next part. The total salary was rupees 6 lakhs. And when I asked the management that management, I need to verify this salary payment of rupees 6 lakhs. Please give me the details about number of employees, the salary per employee. I got this information only. That is 500 employees multiplied by 1000 per employee. Tell me, is this something unusual? Is this something unusual? Yes. Is this something I can say the auditor identified certain inconsistency? Yes. Now tell me, we are auditors. We are supposed to give an expert opinion on the financial statements. And unless and until we are clear about each and every component item of the financial statement, can I give the opinion on the financial statement? No. So, what will I do with this fluctuation or this inconsistency or this unusual something? What will I do? Will I as an auditor ignore it? No. There is something fishy in this, that why there is a difference. So the essay says, do one thing, investigate it. So investigations of what? Investigation, it says that analytical procedures also include, once you have analyzed this data, not only this, the analytical procedures also include the investigations of identified fluctuations, inconsistent relationships, or if, let's say, we as an auditor, we are comparing the actual cost with the standard cost or the budgeted cost, right? So if there is a difference by a significant amount, so that is also part of what? Analytical procedures. Why? Because we are comparing, we are analyzing. So if there are certain differences between the actual and the budgeted by significant amounts, or there are identified fluctuations or inconsistent relationships, then perform the investigations. So the SA 520 says that in analytical procedures, you will be evaluating the financial information through analysis of plausible relationship among both financial and non-financial data. And it also includes what? The investigations of the identified fluctuations, inconsistent relationships, or what? A significant difference between the actual and the standard. So clear? Clear. So I'll just take you through the module and every bit of it will be now clear to you. In case you any doubt is still pending. See, chapter number 8, Analytical Procedures. If you remember, students, when I gave you example of XYZ Limited at the very beginning of the lecture, I said that by doing the routine checking, it might not be possible to check each and every identification, right? So where is this written in your module? See, I'll just quickly take you through the module. I hope you are able to see the screen. Since routine checks cannot be depended upon to disclose all the mistakes or manipulation that may exist, we are using the word may exist in the account, certain other procedures also have to be applied, like comparisons. If you remember, we have compared with the industry trend. If you remember in our example, we saw that wages have always been 30% of the sales. The ratio analysis is like comparing the GP ratios, and in addition to reasonable test. What are all this? We'll be discussing in detail today itself. These are called overall test. Analytical procedures have acquired a lot of significance, and SA 520 discusses the application of analytical procedures. Now the example with respect to rent, quickly see. CA Amar wants to verify the payment of XYZ Limited on account of building rent paid during the financial year 2020. The rent amounts to 50,000 per month. The monthly rent payments are consistent with the rent agreement. However, the other companies in the similar industry are paying rent of 10,000 per month for similar location. How will applying analytical procedures impact the verification process? Students, this concept, the entire concept is very beautifully explained in this solution. See, if C. Amar checks in detail the monthly rent payments, he may find that such payments are consistent with the rent agreement. That is, XYZ paid 50,000 per month as rent, and the same is getting reflected in the rent agreement. Here, C. Amar may not be able to find out the inconsistency in rent payment with respect to rent payment prevalent in the similar industry for rent of similar location. So basically it is saying that routine checking same, such unusual thing cannot be identified. If CA Amar applies the analytical procedures, that is compare the rent payment of XYZ with respect to similar payments made by companies in similar industry and similar area, that is other things remaining the same, he will notice an inconsistency as the other companies are paying very less rent payments. So, however, if CMR does not make such comparison and only checks the monthly payments, he would not have found such inconsistency and such misstatement may remain undetected. Clear? Now, what is the definition of analytical procedures? See, evaluation of, try to break this definition. Evaluation of what? Financial information. I gave you example of what? Total salary. How? Through analysis of plausible relationship, possible or believable. This is what our second point. Between, that is among both financial and non-financial data. Analytical procedures also encompasses include, the dictionary meaning is include, such investigation as is necessary of identified fluctuations, relationships that are inconsistent with other relevant information and that differ from expected value by a significant value amount. Clear? So this is the definition. And how to learn this definition? The example that we discussed about wages per worker, total number of workers, this you can just read. Here wages per worker is a financial data. Total number of workers is a non-financial data. The statutory auditor is evaluating financial information, that is total wages. How? By analyzing the relationship between wages per worker and the number of workers, which is non-financial. Clear? Clear so far? Very simple, but very important also, right? So please quickly send me the replies whether the definition part, we have just done the definition part, right? What all is included in analytical procedures, you will be able to understand everything in detail as and when will be proceeding. So now we have understood what? That we are analyzing something. We are analyzing the relationships and we are including both financial and non-financial information. Quickly send me the replies whether whatever we have done so far is clear. It should be clear, I expect, right? Now, analytical procedures, if you see, when in our two examples with which I started the class, with respect to what? Rent payments. The auditor was comparing the rent paid by the company with respect to the rent paid by the other companies in the similar industry and similar area. So I can say that analytical procedures includes consideration of comparison. There is certain comparison of what? Of entities information. Clear? There is certain comparison of information. Clear? Then our second example, whereby the auditor was analyzing the relationship between wages and sales. What was that? I can say that was consideration of relationships. Consideration of relationships. Now we'll try to understand this comparison and this relationship thing in detail. Okay? So students are saying so far it is clear. So now we are trying to understand those examples in more detail. Abhi tak itna to we have understood. This is beyond the routine checking. Okay? Beyond, like verifying the rent agreements, checking the expense vouchers, the ledgers. Beyond that, we are doing something. And what is that something? We are analyzing the data. We are applying logical reasoning, right? So first is comparison of entities information. Clear? tell me what all comparison can be there. Tell me what all comparisons can be there. One to we have just seen now. In fact, two we have seen. What kind of comparisons can be there? So first of all, I can say, suppose GP ratio, gross profit ratio is there. Okay? So one way is I do a routine checking. I check the sales, the income side in detail. I check the expenses in detail, and then I calculate that GP ratio should be this, right? I'm checking each and every item of P&L. Okay? Suppose if I have to take a picture like on the face of the financial statement, that after reading the financial statement, I am thinking that the GP ratio should be this. Or after considering the industry of the client, I'm considering that in this industry, the GP ratio comes like, say, 10% or 12%. Okay? So suppose this year, the GP ratio is 12%. What I can do is, I can compare this GP ratio of my client with the GP ratio of my client itself, but for what? For previous or the prior periods. This can be one comparison, simple, that this year it is 12%, or I can say last year it was 10%. This time I'm expecting around 11 to 12% of the GP ratio with respect to this client. Okay? Or prior periods. So I can say from the last 2 years, this has been the trend. So this year I'm expecting that it will be 14%. So with prior period, I can compare the industry's my client's information. Clear? My comparison can be with the prior period. Clear so far? Now, another thing can be, suppose the company has prepared certain budgets or forecasts. Okay? Let's take example of what cost. So I can just, look at the P&L and I'll see, the total cost is 10 lakhs and the budgeted is somewhere near around 11 lakhs. So it is fine. I can take a rough idea by comparing the actual information with the budgets or the forecast, or I can compare the data with the auditor's expectation. Now, what is that? Suppose, student, you remember in essay 315, when we were identifying and assessing the risk of material misstatement through understanding the entity and its environment. What is this? The name of essay 315. So we were understanding the entity and its environment. And environment includes the industry and the entity also. So maybe after looking at the industry situation, after looking at the financials of the last year, the auditor had some expectation in his mind that 10% was the GP ratio last year. And considering that other companies were also earning 10% last year. Now the other companies are earning 12%. The auditor may expect that the client will have a GP ratio of 12% this year, right? So what I'm doing, I'm comparing the actual GP ratio with the auditor's expectation. How will the auditor expect? While he was performing the risk assessment procedures under essay 315. Clear? So comparisons can be with the previous year ratios, or comparisons can be with the forecast or budget done by the management, or any expectation if the auditor is having. Suppose while I was just going through the last year's financial statement, I just obtained the schedule of the assets, right? I asked the management give me the schedule of the asset of this year also. And roughly I calculated that this should be the depreciation. So auditor is expecting that this should be the amount of depreciation. So comparing the actual depreciation with the auditor's expectation of depreciation. is another comparison that is possible. Then we have seen that we can always compare with what? Industry information. This example we have already seen. So when we are saying that when the auditor is performing analytical procedures, he is considering certain comparison. Comparison of what? Comparison of his client's information with, say, prior period information of either the client or the industry, with the comparison with the industry information, the other companies in the similar industry, or comparisons with the budgets and forecasts which the management has given. Or it might be possible that auditor has developed any expectation about anything when he was, performing the risk assessment procedures, or when he was just going through the financials of the previous year, or in fact this year also, the way I took the example of depreciation schedule. So clear so far? What is meant by comparison as such? Clear? Please, your answer, your reply, whether it is clear or not. Then we'll see what is meant by relationship, consideration of relationship. See what is meant by relationship. First of all, there are a number of items in the financial statement. Clear? So first is among the elements of financial statement. Example, your GP ratio. You can say debtors turnover ratio. So what is auditor doing? Here auditor is considering the relationship between the profit and the sales. Here the auditor is considering the relationship between what? Your net credits and the average debtors, trade receivables. So auditor is what is the auditor doing? He's considering the relationship among various elements of the financial statement, be it P&L item, be it what? The balance sheet item. So these are what the financial elements of the financial statements, right? And the second is, you have seen that relationship between simple, which we have seen in our definition, financial information and non-financial information. Relationship between financial information and non-financial information. What kind of non-financial information? It can be number of employees. Suppose a construction company is there, and they are the builders. Our client is a builder, and it has given certain shops on rent, right? So the rent per flat multiplied by rent per flat is a financial data, but what is non-financial data? The number of flats occupied or given on rent, right? So any number, suppose he is analyzing the number of defects and is comparing it with sales. So the number of defects in the products, suppose he is considering the number of customer complaints, he is analyzing that data. So the relationship between the financial information and the non-financial information. Clear so far? So this is about your what is meant by relationships and comparison. I'll take you through the module. See, analytical procedures include consideration of comparisons of the entity's financial information as well as consideration of relationships. Now, see, try to understand this diagram. Comparing the financial information, comparisons. Consideration of what? Relationships. And if you remember, we have seen when we were discussing the definition that auditor will investigate. So while he'll be performing certain procedures. So other procedures, and all that becomes your analytical procedures. Right? Now, what are the examples? Students have given this in your practice questions. Acha, the assignments, that is your MCQ, your case scenario and descriptive questions along with the answers have been uploaded on the portal, and you can download them We'll be discussing them in detail by the lectures end. So what are the examples of comparison? Acha, I was telling you that I've given this in as a practice questions. So see, comparable information for prior periods. You can read this example. This is very simple. That last year, the traveling expenses were 2 lakhs. This year, 2.5 lakhs. There has been an increase of 25% now. So now the auditor will analyze that why such an increase in the traveling expense. Anticipated results, that is budgets or forecast. Someone was asking me to discuss. Rohit is saying, ma'am, what is second point of budget? See, it says that management, the entity must have prepared certain budgets. Let's say budgeted cost, that is standard cost or the standard cost. So auditor will compare the actual cost with the budgets that has been given. Suppose management has prepared a budget that this time we are going to spend so much on repair and maintenance. So he'll compare the actual figure with the budgeted. Or say it says expectation of the auditor, such as estimation of depreciation. Like I gave you an example that auditor, while analyzing the financials of the last year, he may ask for a depreciation schedule for this year, and roughly he may calculate that he is expecting that this year the company should have charged depreciation of say 10 lakhs in the P&L, and then he'll compare it with the actual. And last is comparing with the industry information, such as comparison of entities ratio of sales to accounts receivable, industry averages, or other entities of the comparable size in the similar industry. Clear? Then what is meant by relationship? Consideration of relationship among elements of financial information. For example, your gross margin rates, your GP ratios. And the other is among relevant financial and non-financial. For example, the number of employees, and we took the example of number of flats occupied or shops occupied. Okay? So this is a very simple illustration. It says that the client, it is having in 1920 and 2021 inventory turnover ratio as this, and the GP ratios as this. And auditor took the data from the industry, and the auditor found that the similar industry, though the companies are different players in the similar industry, the average is that the inventory turnover is 3.1 and 2.8 and 23.6 and 22.2. Okay? This is just for analyzing. Okay? So now see, it says that you can use various methods to perform analytical procedures. It can be simple comparisons. I can say you can just see from 2.8, the industry is having 3.1. So simple comparisons, or I can say you may calculate certain mean, right? Or complex analysis using advanced statistical techniques. This statistical modeling we'll be doing at the in this today's lecture itself. So basically it want to say you can apply any method, and it may be simple or complex, and analytical procedures can be applied on the consolidated financial statement or any individual element of the financial information. This we have done that comparison can be between client and industry data, client and similar with similar prior period data, client data with client determined expected results. What is that? Budgets. Client data with auditor determined expected results, and client data with what? The non-financial data. Clear? Simple? Now, quickly tell me, is it clear so far? Very simple concept, right? Now, students, if you remember, when we were doing essay 315, the name of the essay is Identifying and Assessing the Risk of Material Misstatement Through Understanding the Entity and its Environment. So what is auditor doing? He is performing the risk assessment procedures. He is understanding the entity. He is understanding the environment. Okay? So suppose he is going through the financials of the entity of the previous year, and he was just checking that what are the corresponding, ratios or the ratios of the other companies in the similar industry. Okay. Now, when the auditor is performing the analytical procedures, while he was performing risk assessment procedures, so these are dealt in SA 315. Okay. SA 315 says auditor has to perform the risk assessment procedures. Why? In order to understand the entity and through understanding the entity and its environment. So let's say when auditor was going through the financial statements, he compared the last years with the industry, the other companies in the similar industry, and he was like that I am expecting that my client will have a GP ratio of say 12% this year. Abhi he has not done the audit. He's just performing, he's just planning the risk assessment procedures, or he's performing the risk assessment procedures, and he developed an expectation. So this is covered where? This is covered in SA 315. Okay? So this is the first stage, risk assessment procedures. Thereafter, if you remember, we have seen that auditor will perform further audit procedures. Remember FAP, RAP, FAP, and there we did that auditor will check test of controls, or auditor will perform substantive procedures. This we have done, and then we have seen that while performing substantive procedures, auditor will either perform test of details which include vouching and verification, or he will perform analytical procedures. We have done this in detail in chapter number 3, and again we have, like, a number of times we have done this concept, right? So when the auditor is performing the analytical procedures as substantive procedures, when the auditor is performing the analytical procedures as substantive procedures, this is covered by SA 520. The analytical procedures to be performed while performing risk assessment procedures is covered by SA 315. So what does SA 520 talk about? It says that when the auditor is performing the analytical procedures as the substantive procedures, that is covered in SA 520. Clear? And then it says when the auditor is giving his opinion, when the auditor is forming an overall conclusion on which he is giving his opinion, based on which he'll be giving his opinion, at that time when he performs analytical procedures, that is also covered in SA 520. So I can say when the auditor is performing analytical procedures, he is developing expectations, that is covered in SA 315. When he is actually performing the analytical procedures, it might be possible now that earlier he developed an expectation. Okay? When he was checking the financial statement, he was again computing certain ratios. That is, he is performing the analytical procedures as substantive procedures, right? That is covered by SA 520. And when he is finally giving his opinion, it might be possible that the auditor will think that I expected a GP ratio of 12% under SA 315. Now, when the financial statements have been audited, at last, let me just again check the actual GP ratio and compare it with my expectation. So this performance of analytical procedures while forming an overall conclusion about the financial statement is also covered in SA 520. This will be more clear when we'll be discussing the timing of analytical procedures. Abhi, I hope it is clear. So what we have seen we have seen that when the auditor performs the analytical procedures, that is when he is comparing, when he is calculating the ratios as risk assessment procedures, that is covered by SA 315. When he is performing the analytical procedures as substantive procedures, that is covered by SA 520. And then at last he is forming the oral conclusion, that is now he is writing his report and he is comparing the actual GP ratio with his expectation. This comparison, this calculation is also covered by SA 520. Simple. So with this we have understood what are analytical procedures. So we saw that it is analysis. It is evaluation of what? Financial information through analysis of what? Plausible relationship amongst both financial and non-financial data. And not only this, thereafter investigation of any identified fluctuation or significant difference from the expected amounts or any inconsistent relationship. Okay? Then we saw what comparisons can be done and what relationships are there. So we saw that comparison with the previous year, with the industry, or with the forecast or budgets given by management, or with the auditor's expectation. Now, auditor's expectation is what? This. Try to link. Then we did what are relationships? Relationships are among the various elements of financial statement or among financial and non-financial data. Then what we did is this, that this is covered by SA 315 because here analytical procedure is being performed as what? As risk assessment procedures. But when you are actually conducting the audit, when you are performing the further audit procedures, and when you are making an overall conclusion, that is when you are giving your report, it is covered by SA 520. See, these further audit procedures are performed where? Under SA 330, right? So basically under 330, auditor decides whether to perform test of details or whether to perform analytical procedures, and how to apply analytical procedures will be covered by SA 520. Aditya, your doubt regard whatever you have written, it will be clear from here. See, SA, first I am reading this line. The use of analytical procedure as risk assessment procedures is dealt in SA 315. Then read this. SA 330 includes requirement and guidance regarding the nature, timing, extent of audit procedures in response to accessories. These audit procedures may include substantive analytical procedures. Okay? So 315 में auditor applied risk assessment procedures. He performed risk assessment procedures, and as part of risk assessment procedures, auditor, he performed analytical procedures. So that is covered by SA 315, right? Now, after 315, 330 comes, which is auditor's responses to assessed risk. There he'll decide whether he'll be performing the test of details or analytical procedures. Now, once he decides that he'll be performing analytical procedures, then he'll be applying them as per 520. And when he decides to apply analytical procedures again at the time of finalizing the report, then also he'll be applying SA 520. Clear? Clear. So, let us do the next topic here only. If I ask you, what is the objective of auditor as per SA 520? Objective of auditor as per SA 520. So, itna to we have understood that when auditor is performing analytical procedures as substantive procedures, this is covered by SA 520. And when auditor is performing analytical procedures at the time of finalizing the audit report, that is also covered by SA 520. Okay? So I can say that when auditor is performing analytical procedures as substantive procedures, quickly tell me what is our objective? Why are we performing the substantive procedure? To obtain audit evidence. So first objective will be, when auditor is performing these analytical procedures as substantive procedure, the objective will be to obtain audit evidence. Simple. Second objective, when auditor is performing analytical procedure, when he is forming an overall conclusion, what is he doing? What is he doing? He is just checking that whether this expectation which he developed earlier, whether this expectation and the financial statements. See, now when he's finally has done the entire audit, the financial statements are correct, they are true and fair according to him. He will now, based on the finalized financial statement, he'll calculate the actual GP ratio. Okay? And at the overall conclusion state, what is the auditor doing? He is just seeing whether this is consistent with his expectation, which is developed in Essay 315. So I can say two objectives. First one is to obtain audit evidence. We all know why are we performing audit procedures, to obtain audit evidence. And second, ठीक है, यहाँ पे भी we need to obtain audit evidence, but when he is using audit procedure in order to draw the overall conclusion, he basically wants to confirm that the financial statements are consistent with his expectations. Clear? So this question also I have given you in the practice question. Let us just quickly see what are the objectives of auditor. See, very simple. The objective is to obtain relevant, reliable audit evidence when using substantive analytical procedures. See, when you will be using analytical procedures as substantive procedures, they become substantive analytical procedures. So first is to obtain audit evidence, and see, now keep the example of this financial statement being consistent with his expectation, and then try to understand. To design and perform analytical procedures near the end of the audit that assists the auditor when forming an overall conclusion. Why? Because he wants to see that whether the financial statements are consistent with the auditor's understanding of the entity. And when did we obtain the understanding? We obtained it under Essay 315. Let us try to just let us see this second point, B point again. First, look at the board. What I have told you. Here too we are obtaining audit evidence. Here also we are obtaining audit evidence. But what we are doing, when the auditor is near the end of the audit, that is, he is forming his overall conclusions about the financial statement as a whole. What he is doing, he will design and perform certain analytical procedures. Okay, why? Because he wants to be sure that whether the financial statements are consistent with his expectation. Suppose based on his understanding about the entity and the industry, the auditor developed an expectation that the company should have a GP ratio of around 12%. Okay? But when he actually calculated the GP ratio based on the actual financial data, which has been now finalized, it comes out to be say 8%, or it comes out to be say 16%. So the difference is a significant amount. Now this is not acceptable. So he'll again analyze. So that is why he wants to see whether the financial statements are consistent with his expectation. And when did he obtain the expectation? When he developed the expectation? When he obtained an understanding about the entity. So clear about the objectives? These were the objectives of the auditor as per Essay 520. Why are we not saying to perform them as risk assessment procedures? Because that is covered in Essay 315 itself. Essay 520 talks about this situation where the auditor is performing analytical procedures as substantive procedures, or where auditor is performing the analytical procedures near the end of the audit. So this concept will be more clear when we discuss about the timing of analytical procedures. We will be discussing the three phases one by one. See, what is the timing of analytical procedures? We have seen that we are performing it as risk assessment procedures when we are obtaining the understanding. So I can say at the planning stage. Then we were performing the analytical procedures as substantive procedures. We have seen that is at the testing phase. And then we saw that while formulating the overall conclusion, also auditor performed the analytical procedure. So I can say at the completion phase. So basically what happens is when the auditor is obtaining an understanding, so let's say he developed an expectation that I'm expecting GP ratio near around 14%. Okay? So he is performing analytical procedures as in the planning phase. Suppose while testing phase, testing is what? When he's conducting the audit procedures for checking the financial statements. Suppose he's checking the salaries and he calculated a ratio that salaries to sales, the ratio, he decided that he'll be comparing it with the previous years. So what he's doing, he's calculating certain ratios and he's comparing. This is nothing but analytical procedure. So this is the example of performing analytical procedure at the testing phase. And what will be the example of completion phase? The example that I just told you, that now when he's finally giving his report near the end of the audit, that is his formulating an overall conclusion, he'll see whether his understanding and the financial statements are consistent or not. So उसने सोचा था यहाँ पे that GP will be इतना, whether it is actually that percentage or not. Clear? So in your module, these have been given in detail one by one. So let us start with planning. So planning may, first of all, what will come, that he'll obtain an understanding of the entity. Auditor will obtain an understanding of the entity. Clear? And what is the name of essay 315? Identifying and assessing the risk of material misstatement. So while the auditor is performing analytical procedures here, suppose auditor analyzed that last to last year, the GP ratio was 10%. Last year, it was 15%. And considering the information, the inquiry that he has done with the management, he got an understanding that this year there has been a reduction in the GP ratio. So kind of there is a risk now. Risk as in he will have to check this in detail now, that why is this happening when this is not happening with the other companies in the similar industry. So I can say auditor will at the planning stage, first of all, he'll understand the entity. Okay? How? By seeing the various ratios, by comparing the various data with the industry or with the prior period. Then he'll also identify if any potential risk with respect to that client is there or not. Then auditor will, based on his understanding and his assessment of potential risk, he will consider the NT of audit procedures that should be performed. Planning stage में तो he'll see na that based on this, अब पता चल गया that there is severe fluctuation which is not there in the other companies. So he'll check the data related to GP ratio, the P&L items, the expenses, the revenues in detail. So he'll decide the NT of the audit procedures. And we have already done, this is just a repetition, that he will not just consider the financial information, he will consider the non-financial information also. Let's take example of a company. My client is situated in green belts, like the northeastern states, and the auditor is obtaining the understanding of the entity and its environment. The auditor found that the environment authorities, they have imposed certain penalty. They have issued a notice to the uh, client. So those notices, and suppose it is for with respect to the height of the chimney, with respect to some pollution that the company is creating. So that is a non-financial information now, but auditor will consider that also. And wherever, see, he is considering the data, the information with respect to prior period, with respect to other companies. So he'll just analyze that what will be the NTE of the audit procedures. So this is the uh, performance of analytical procedures at the planning stage. Abhi, I have left this purpose wala topic. This will be doing later on. Let us just quickly see about timing. So see, experienced auditor use analytical procedures in all stages of audit. Analytical procedures are required in planning phase, these are required in testing phase, and these are required in completion phase also. Planning, testing, and completion. Okay? In planning. So first of all, analytical procedures helps the auditor in understanding the client's business. Okay? So when he was understanding the entity, auditor will see, acha, this company can have a GP ratio of 10%. Okay? Or this company is now facing losses considering the entity and its environment, and helps in identifying the area of potential risk by indicating the developments in entity business which he was previously unaware. We have seen that certain fluctuations cannot be identified by routine checking. So this line is talking about that. Previously unaware, auditor was not aware. Okay? It will help the auditor to determine the NT of his other audit procedures, and auditor will consider financial as well as non-financial data like the number of employees, the square feet of selling space, suppose these are some builders, volume of goods produced, and the similar information. Analytical procedure may help the auditor during the planning stage to determine the NT of audit procedures, to obtain audit evidence for specific account balances or class of transaction. Students, you may get a question that analytical procedures are of no use to the auditor at the planning stage. Explain. So this will come that these are helpful. How? They help the auditor in understanding the entity. They help the auditor in identifying the potential risk of misstatement. They help the auditor, based on this understanding, auditor is able to determine the NTE. NTE, Priya, NTE is nature, timing, and extent of audit procedures. And auditor considers both financial as well as non-financial information. So clear how the auditor can use analytical procedure at the planning phase. Now this is about testing phase. That is when the auditor is using the analytical procedures as substantive procedures. They become what? They become substantive analytical procedures. So students, I'll do one thing. This is a lengthy topic. Before starting with this topic, let us just quickly take a 10 minutes break, and I'll try to complete this chapter today itself. But in case we are unable to complete this chapter because we are discussing everything in detail, so I'll be taking the balance part of this chapter in our session on Wednesday, whereby we'll be starting with chapter number 9, and at the end of the session, I'll take the remaining part. So let us take a quick break of 10 minutes, and then I'll start with analytical procedures as substantive procedures. So students, we are back after the break. Now our next topic is using the analytical procedures as substantive procedures, that is as substantive analytical procedures. Okay? So see students, this we have already done in chapter number 3, that when auditor is performing the substantive procedures, he will decide that whether to perform test of details, that is do a detailed checking by way of vouching and verification, or whether to perform the substantive analytical procedures. See, or a combination of both. This depends upon what? Auditor's judgment. If he considers that applying analytical procedures will be effective, he may use that. If he thinks that applying analytical procedures, that is just calculating the ratios or just comparing or just analyzing the data is not sufficient, he considers that checking of the transaction in detail is required, then he may go for test of details. So our next topic is that what are the factors upon which whether to use the analytical procedures or to do a detailed checking, that fact depends. So what we are saying, what are the factors that affect whether to use the analytical procedures as substantive analytical procedures. Now, suppose students, what is analytical procedures? We have seen that calculating the ratios, comparing it with the maybe the previous year, or comparing the data with the other companies in the similar industry. Now, tell me, if there are no other company in the similar industry, your client is a monopoly. Okay? Let's take an example of Indian Railways. There is no comparable data. So, if comparable data is not available, auditor may not be able to apply substantive analytical procedures. He will have to check everything in detail. So our first point is availability of data. Suppose I gave an example that auditor wants to check the ratios with the other companies in the similar industry, but there is no other company in the similar industry, or let's say there are two players in that industry, your client and a new company which is a new startup. So the data as such, comparable data is not available. So first of all, whether to use substantive analytical procedures or not, first will depend upon availability of data. I hope with the example of Indian Railways, or where I gave you example that two players are there, one is your client and the other is just a startup. So you cannot compare as such. So if that data is not available, auditor has no other option but to check the transactions in detail. Clear? Now let me just explain the second point with the help of example. Suppose auditor is conducting the audit of Reliance. Okay? And auditor wants to see, Reliance has a number of segments. Say Geo is there, clothing, Reliance clothing is there. The petrol pumps are there. What all are there? Say electronics are there. Okay? So suppose the auditor wants to compare the data related to telecom sector with other company in the telecom sector itself. Okay? The auditor wants to compare the clothing, the financials of the clothing segment with another company in that business only. But let's say this separation of data segment wise is not available. That is, the data is not segregated. That is, disaggregation of data is not available. What is disaggregation? Segregation, that segment wise data, if that is not available, and as analytical audit procedures, auditor wants to compare the sales of each and every segment with respect to the companies in the similar business. If that data is not available, how will you apply that analytical procedure? So the second point is disaggregation, that is segregation of data. If that is available, auditor may apply substantive analytical procedure. So basically what we are doing, when the auditor is analyzing whether he can apply substantive analytical procedures or not, he will see first of all whether the data is available, because the ratios, the comparison is to be done of certain data, so that data should be available. Whether the segregation, that is disaggregation, whether that has been done or not. Third is account type. What is meant by account type? A very simple example. Say there is some item from the P&L item. Suppose income and expense account may say there is certain item, let's say traveling. So see, with respect to income or expense item, auditor can always expect that last year the company incurred the expense of 1 lakh as traveling expense, and this time I am expecting a 5% increase. So this is a kind of predictable item. You can predict any income or expense ki last year itna tha, this year I am expecting this much. Students, can I say last time there was one building worth rupees 1 crore, this time there should be 2 buildings worth rupees 2 crores? No. So I can say that with respect to income and expense items which are predictable over time, the auditor can apply the analytical procedures. However, with respect to certain balance sheet items, let's say for example building or the plant and machinery, we cannot say now that last year itna was the building, this year it should be increased by 10%. No. So in that case, auditor will perform test of details. He'll see the title deeds. He'll physically verify he'll see the existence, right? He'll see the title deeds. He'll see the depreciation schedule. So the third point is account type. I'll just take you through the module. See, whatever is written here now, we have discussed from the beginning. So this you can read. Factors to be considered for substantive and audit procedures. Don't get confused. This is basically substantive analytical procedures only. Okay? So first was what? Availability of data. See, the availability of reliable and relevant data will will facilitate effective analytical procedures. Clear? Disaggregation, the degree of disaggregation, that is segregation, or I can say segment-wise information. Segregation. Segment-wise information can directly affect the degree of its usefulness. Now this point. Account type. Substantive analytical procedures are more useful for certain type of accounts than for others. For example, income statement accounts tend to be more predictable because they reflect accumulated transactions, whereas balance sheet accounts, they are net effect of transaction at a point, and basically they are subject to what? Management judgment. So this example you can read, it is very simple. Now the next point is source. This aggregation wala point Vanchika and Aditya are asking me to repeat it. This, we have covered these 3 points. Let me just repeat this aggregation point. Suppose I am conducting the audit of Reliance and telecom, petrol, clothing, say jewelry or electronics. Okay? Now this year, I as an auditor, I am deciding whether with respect to this client, I can apply analytical procedures. So I decided, okay, I'll apply analytical procedures, and I want that I asked the management that management, please give me the income and expense of your telecommunication segment, of petroleum segment, of clothing segment, of jewelry segment, and electronic segment of this year and last year also. Now let's take a hypothetical example. If such segregated is what? Segment wise divided data. Let's say it is available for the current year, but in case it is not available for the previous years, will you be able to apply that analytical procedure? No. Why? Because the data is not segregated. See, what is disaggregated? Segregated or divided into segments, like the divided data. Okay? Or let's say you want to compare the direct wages, the wages expense of your client with respect to the other companies in the industry. But with respect to the other companies now, you are not having the figure of wages. You have a total of expenses. So can you compare the wages with total expenses of the other industry? No. Why? Because the data available is not separated. It is not disaggregated. Okay? And with respect to account type, I gave you example that the income statements or the expense, these are predictable over time. Not income statement, the income item or the expense item. These are predictable over time, and you can very well apply substantive analytical procedures. But you will not say na, that building last year was worth ₹1 crore, there should be a 10% increase. No. So with respect to that, the auditor may decide to test the transactions, the whatever was there in detail. Anushka, I have again repeated this account type. I hope it is clear. Now, what is source? So, source basically means the source data on which these procedures are to be applied. Source means the source data on which audit procedures are to be applied. So again, with respect to items which are predictable over time, your sales, your purchases, you can apply the substantive analytical procedure. Now let me take an example. Suppose research or advertisement expenditure has been done this year. Last year, there was no expenditure on research and development. Last year, there was no expenditure on advertisement. So can you compare? No. So source data. The data should be predictable. Only on that you will be able to apply analytical procedure. I gave the example of source as purchases and sales, which are more predictable. And in your module, the term used is called significant class of transactions. For example, research and development expenditure. For example, advertisement expenditure. What is that? What is meant by significant class of transactions? These are important transactions, but these are not repetitive in nature. So you cannot apply the analytical procedures on those which are not predictable. Clear? Then next point is predictability, which is clear. On predictable items, the substantive analytical procedures can be applied. However, items which are not predictable, again, the example of research. See, I'm giving you same example for this account type, source and predictable, because basically the crux is that the transaction should be predictable. The item should be predictable over time. Nature of assertion. Next is, I'll take you through the module, nature of assertion. What is meant by that? Suppose I have to see the measurement of traveling expense. What is measurement? One of the assertion. So I can say that last year the traveling expenses were 1 lakh. This year I'm expecting an increase of 5%. So I can measure. This assertion can be, I can consider this assertion by performing substantive analytical procedure. But tell me, if I have to check certain rights and obligation assertion with respect to balance sheet item, can I apply substantive analytical procedure? No. There though I'll have to check in detail. I'll have to see the title deeds. I'll have to see the depreciation schedule. I cannot apply the substantive analytical procedures. So with respect to valuation, measurement or completeness assertion, I may apply substantive analytical procedure. But with respect to assertions like rights and obligations, applying these are not possible. Auditor will have to perform test of details. And last and but not the least, inherent risk. Now what is inherent risk? You all have already done in chapter number 4. Suppose the inherent risk is high, or the risk of material misstatement is high. So in that case, quickly answer me, will you apply, if I say there is a significant risk, I am expecting that there is a fraud. Tell me, will I apply only substantive analytical procedure? Will applying only the substantive analytical procedure be fine? When I am expecting significant risk, or I am expecting that the inherent risk is high or the risk of material misstatement is high, tell me, only by applying substantive analytical procedure will I be in a position to give my opinion? No. Then though I'll have to check in detail now, because here though I'm just analyzing, I'm having a look at the broader picture. So these are the factors. Now let us just quickly see it from the module. Account type we have done, and Anushka is saying, ma'am, it is clear, I think, है ना? Students, regarding tomorrow's session, please check the schedule. Now the class is on Wednesday. Please check it. So what is source? See, some class of transaction tend to be more predictable. Similar transactions are there. However, transactions recording in non-routine or estimation scored, that is significant classes of transaction, are often subject to management judgment. This will be more clear with the help of this example. See, transactions of routine nature, like transactions related to sales, purchases, are predictable and repetitive, and therefore these analytical procedures can be efficiently applied. However, significant classes of transaction. What are significant classes of transactions? These are the important transactions, but they are not repetitive in nature. For example, your expenditure on research, advertisement. These are not of routine nature and are subject to management judgment, therefore more difficult to predict. Next point is simple. Again, sales and cost of goods sales. It is basically saying that where the relationship between two items is predictable, you will apply the substantive analytical procedure, otherwise check in detail. Nature of assertion. Students were asking me to repeat. Sakshi, please listen this time. Nature of assertion. See, if I have to check rights and obligations with respect to building, applying analytical procedure will be of no use. Now there, so I'll have to check in detail. I'll have to check the title deed. So substantive analytical procedure will be more effective for providing evidence for some assertion. For example, completeness, valuation, than the others like rights and obligations. Predictive analytical procedures using data analytics can be used to address completeness, valuation, measurement, and occurrence. I gave you example of traveling expense, that last year they were 1 lakh. This time, if I want to know the measurement assertion, I can expect that 5% increase will be there. But I cannot say this with respect to rights and obligations. Uske liye to I'll have to perform test of details. And inherent risk, so it says that when there are significant risk or the inherent risk is higher, the auditor will have test of details. Similarly, when significant risk is identified, audit evidence obtained solely from substantive analytical procedure is unlikely to be sufficient. In other words, auditor will have to perform what? The test of details. Clear? So what the topic was, what are the factors that the auditor will consider while he is deciding whether to perform analytical procedures as the substantive analytical procedures. So I hope this topic is clear. Quickly reply whether it is clear or not. Or if there is any query, please send in the query. Now the next topic is, we are repeatedly saying that auditor will apply the analytical procedure. Now what are the techniques? What actually the auditor will do? The techniques. Student, if you remember, when we started the class, there was a topic and I said that I'll be discussing that later on. I'll just show it to you. See this. The auditor will have to apply audit procedures like comparison, trend, ratio analysis, reasonable test. Now, what are these is our next topic. Student, please download. Anushka is saying, ma'am, tomorrow there is, whether there is a lecture or not. So please download the latest schedule. During the class only we'll see. Please download the latest schedule of your classes. Now we are doing what? Techniques. So what are the techniques? The techniques are trend analysis. So basically, while applying analytical procedures, what will auditor do? He can perform trend analysis, he can perform ratio analysis, reasonable test, and structural modeling. So these are very simple tests, very basic tests. You must have, done them in your foundation somewhere or the other. But let us just see them in detail. What is trend analysis? See, when you are looking at the movement of an item, for example, traveling expense. Suppose you are conducting the audit of 2021, and since, see, this is 17, 18, 18, 19, and 19, 20. Okay? So you saw that it was 1 lakh, it was 1,05,000, it was 1 lakh, say 10,000. So this is a trend, an increasing trend. So you are comparing the current year item with respect to the trend of the earlier years. With respect to the trend of the earlier years. So this is called what? This is called trend analysis. See student, this is a very common technique. Whenever you start an audit now, whenever you are obtaining the information about the entity and its environment, now, it is a general tendency that you take the last, the financial statement of the last 2-3 years, and you just look at the, profit figures. What is the trend? Whether the company is having a constant profit, right? So you will look at the income expenditure account, what trend the entity is following. Okay? So this is what? Trend analysis. We are considering the prior period, the financial statement, the items with respect to the previous years, and we are comparing them with the current year, and it is a commonly used trend, the commonly used technique. Now say, let me just write it again. Suppose this is 16, 17, 17, 18, 18, 19. It was say 1,10,000. And 19, 20 is again say 1,15,000. And this is my year of audit. Now here I saw that it is 5,000. So there is a change in the trend now. So change in the trend hai, so what will auditor do? He will understand the reasons. He will understand the reasons. It might be possible, na? There is a change in the trend in this year, so nothing wrong in that, but analyze it. Try to understand the reason. For example, say salary was increasing, say by 10% every year from the last figure, and this year you realize that there has been a 20% increase in the salary expense. This is something unusual. It might be possible that the client has fraudulently shown salaries paid to fake employees. So auditor will check this in detail. So this is what trend analysis. If there is any change, no problem. You just try to understand the reasons. However, while understanding the reasons, if you find that there is something unusual, then auditor will have to check that in detail. Clear? Very simple. This is what unusual. So auditor will perform the other audit procedures. Clear? This is trend analysis. What is ratio analysis? Ratio analysis is very simple, ma'am. We have done it a number of times. Suppose auditor is comparing the GP ratio, gross profit ratio of the client. He can compare it over time. That is company's data with respect to last 4 or 5 years. What was the ratio? So he can compare with that. He may compare it with the other companies or the industry average. That my client is having a GP ratio of this. Let me see what other companies are in the similar industry are having. Okay? So it says that ratio analysis, you can do it with respect to assets, liabilities, incomes and expense. Okay? When you are calculating the debtors turnover ratio, you are taking the net credit sales over the average debtors. So here one is the P&L item, one is the balance sheet item. So it says you can calculate any ratio using the asset, liability, income or expense amount. And obviously you will consider the ratio where a relationship exists. As we saw that with respect to wages and sales, there can be a relation that okay, for itna sales, itna wages is there. But can you compare, if you have to check the salaries, let's say, can you compare it with the rate of depreciation? No. Can you compare it with the number of defects? No. So you can compare it with what? The item, the other item which is related, and you can compare it over time or you can compare it with the industry averages. Clear? Simple. It is very beautifully explained in your module. You can just go through it. Third is reasonableness test. See, what was trend analysis? There, though, I was using the last year data. But in reasonable now, I am not using the last year data. So you might get a question that whether reasonable test uses last year data? No. Then what is reasonable test? Basically, reasonable test uses non-financial data. And what is that? For example, I'll say that I'll see number of employees, 500. I'll see salary per employee, 100,000. So I'll say the salary should be 5 lakh. 5 lakh amount is reasonable considering the number of employees. Or I can say that suppose I know that the company has taken certain loan on 5%. Okay? And I know that the company has taken a loan of 10 lakhs. So I'll be like 5% of 10 lakhs, itna should be the interest amount. Reasonable. What is fair enough? Okay? We will see this in detail from the module. This is very simple. But let me just take you through the module once. See what is trend analysis. Trend analysis is what commonly used technique where you are comparing the current data with prior period or 2 or more prior balances. ठीक है? Then previous years के साथ compare करते हो, and if there is a change, you will try to understand the factors or the reasons. So basically, you are analyzing the account fluctuations. How? By comparing the current year with the prior year information. Salary wala example I gave you with respect to unusual increase. You can go through this in your at your home. What is ratio? It says it is analyzing your asset, liability, revenue, expense, any relationship which you can predict. The relationship should exist. And ratios can be compared over time, yeah, with separate entities within the group or with ratios of other company. Financial ratios can be trade receivable, that is your debtors turnover or inventory turnover, freight expense as percentage of sales. The statutory auditor can review GP ratio of the company for the year under audit. He can compare it with the GP ratio of the company in earlier years or with the other companies. Okay? Or with the other companies. What is reasonable test? Unlike trend analysis, this procedure does not rely on events of prior periods. I told you that it will not use the information of prior period, but on what? On non-financial data. For example, occupancy rate to estimate rental income. Auditor may say that there are 100 shops which are given on rent, and on an average, 10,000 is the rent from the shops. So 10,000 multiplied by the number of shops, the rental income should be itna. Okay? These tests are generally more applicable to what? Income statements. What is the example? Let us just see. Interest expense against interest bearing obligations. You know that 5% is the interest, 1 lakh is the loan. So you will calculate ki itna should be the interest. Same way, raw material consumption to production, you can estimate ki itna to hona chahiye. Same way, wastage ya scrap ka percentage to production and raw material. That 2% wastage to hota hai, itna is reasonable. Same work in progress based on issues of material and sales. Sales discount commission against sales volume. That the auditor knows ki 2% commission jata hai and 1 crore ka sales hai, so commission amount should be near to this. Then rental revenue with respect to occupancy of premises. Then what is the last? Just a minute. Just a minute, students. What is the last? I'll just show it to you. The last is structural modeling. Just a minute. Structural modeling. What is this? See, if you remember, we saw that the methods to be used can be simple or complex. And I told you that we'll be discussing what? Just a minute. 1 minute, please. We'll be discussing this in detail in structural modeling. So what is structural modeling? See, these are basically the statistical models which uses the financial and non-financial information for the prior accounting periods to predict the current accounting balances. Example, your linear regression. So basically, the auditor may use certain statistical models. He may apply certain formulas whereby he is considering the change in one variable, the dependent variable, on account of change in the other variable. Okay? So what you need not do it in detail, just have an understanding that these are the typical complex calculations, the statistical models that the auditor use, and he uses the financial and non-financial information, and here he compares the current year's data with respect to the prior period. So this is clear so far. What are the techniques? Now, when the auditor is, next topic is what? When the auditor is applying the analytical procedures, what all should he do? He has decided that he will do based on the factors like availability of data, segregation, source, account, predictability, assertion, the inherent risk. Remember, suppose he decided that I'll be applying the analytical procedures. Then he'll see, I'll be applying these techniques. Now, while he is applying, first of all, Abhi he hasn't decided what technique he'll be following. So first of all, he'll be determining the suitability of analytical procedure. Whether applying analytical procedure and which analytical procedure is suitable for the particular analysis. First is this. Then, if you remember, I told you that analytical procedure will be applied on certain data. So he will see whether the data on which analytical procedure is to be applied is reliable or not. He'll see the reliability of the data. Now, students, tell me, when the auditor was applying analytical procedure as risk assessment procedure, he was developing certain expectation. So when the auditor is applying the analytical procedure, he will develop an expectation. And students, this is just an expectation. It might be possible that there is certain difference. So auditor will see how much difference is acceptable. How to do that? We will be doing this in detail. ठीक है? So here I'll stop, and some 2 or 3 students were asking me that, ma'am, are we having a lecture tomorrow? No. Please download the updated schedule. No lecture is there for audit tomorrow. We will be meeting on Wednesday now. And in the schedule, the chapter number 9 has been mentioned. I'll start with that chapter, but considering the time, I'll be taking the balance part, the MCQs, the descriptive of this chapter on Wednesday. So we'll be discussing these in detail. So what we are doing, that before applying the analytical procedure, first of all, see suitability of analytical procedure, whether applying analytical procedure is suitable or not. Okay? Tell me, suppose there are only 10 transactions. So auditor will think, now why should I apply analytical procedure? I'll check this in detail. Small transactions are there, I can check them in detail. So large volume of transaction should be there. And these should be predictable. Suppose a new startup is there. Last year only the company started and there are no purchases and sales as such. Will the auditor apply analytical procedures? No, there are few transactions, he'll check them in detail. So when he's applying analytical procedures suitable, first of all, there should be large volume of transaction and it should be predictable over time. Then, if you remember the definition, analytical procedure is what? Evaluation of information through an analysis of plausible relationship. So the next point is there should be relationship between the data. This relationship should exist. So you can apply the analytical procedure on the items of the financial information which have certain relationship and that relationship exists. And apply the analytical procedures only when the auditor assesses that applying analytical procedure will be effective. If the auditor feels that applying analytical procedure is not effective and I should check the transaction is detailed, then don't apply it now. So it depends upon the auditor's assessment on how effective it can be. Clear? So abhi tak humne kya dekha hai? What is the suitability of analytical procedures? So it says that where there is large volume of transaction which is predictable over time, the auditor can apply analytical procedure. It can be applied on data wherein there is a relationship between the items to be tested and that relationship exists, and it depends upon the auditor's assessment of how effective will be analytical procedure. Okay? So what we are doing, suitability of analytical procedure, whether a particular analytical procedure is suitable or not. So next point, it says that in some situations it might be possible that the word used is unsophisticated predictive model. What does that mean? Very simple. It's model. It says simple estimation. Predictive is what? Estimation. So it says we are saying which analytical procedure is suitable. So पहले तो हमने देख लिया it is suitable only when there is large volume transaction which is predictable. Relationship is there and only when auditor consider is that effective. अगर auditor को लग रहा है that he should apply test of detail, then apply test of detail. Then it says that in certain cases now unsophisticated predictive model, that is simple calculation, simple estimation are sufficient. With higher accuracy you are able to obtain the results. I'll explain this to you with the help of example. Suppose you just multiply number of employees with the salaries per employee and you see that your salary should be 10 lakh and you find that it is coming at 10 lakhs in the P&L. This is you have obtained an audit evidence with higher degree of accuracy. Now, iske baad, as such, there is no need of any further calculation. However, then it says that this is when you are calculating GP ratio, it is not possible कि you will see अच्छा GP ratio last year के trend में है, my audit is done. नहीं. This will just support your other audit evidences. So it says that which analytical procedure is suitable. First of all, it depends upon auditor's assessment of how effective any analytical procedure is, and then it might be possible that at times unsophisticated predictive models like simple calculations like these are just sufficient. They give you data with higher degree of accuracy. And suppose you are calculating GP ratio, these are also audit evidence, but these are corroborative in nature. That is, they are supporting your other audit evidences. So this was all about the suitability. And last one point, we have done nature of assertion. So again, we have discussed this already. For rights and obligations, your analytical procedures may not be sufficient. However, with respect to measurement, valuation, completeness, you may apply analytical procedure. So this was all about your suitability of analytical procedure. Simple. Now, if I ask you a question, if the internal control of my client are weak, quickly tell me, is applying only the substantive analytical procedure fine? Should the auditor apply only substantive analytical procedure when the internal controls are weak? Quickly, I need answers. Shubham has asked me to repeat this topic. So what we are doing, we are just seeing that whether a particular analytical procedure is suitable or not. Okay? So it depends upon various factors. Suppose there is a new company which is just a startup and there is no comparison in the industry as such because this is a new company. Also, the company is not having many transactions. So tell me now, you will see that achha, there are only 4 or 5 transactions. I'll check them in detail. You will not apply the analytical procedure. So first of all, large volume of transaction should be there and it should be predictable over time. Assets may, building may, you cannot apply the analytical procedure. Na? That last time it was 1 crore, this time it should be 20%. But yes, purchases may, with more applying analytical procedure on purchases is more effective. Okay? Then it says analytical procedure is suitable only when there exists a relationship between the data. Like rate of depreciation or salary may you cannot apply analytical procedure. But yes, rate of depreciation and plant and machinery may you can apply analytical procedure. Then it says whether analytical procedure is effective or not depends on auditor's assessment. And which analytical procedure ke liye it says that it might be possible that unsophisticated, what is meant by unsophisticated? Simple estimation method, these are sufficient. Iske baad you need not do further calculation. For example, you saw number of employees is 500, you saw salary per employee is so and so, and 10 lakh should be the salary, and you checked it in the P&L, it is coming at 10 lakh, then it is fine, no need to check it in detail. However, with respect to GP ratio, it says that it is also one of the audit evidence, but this is just telling you that P&L is correct. P&L को तो check करना ही पड़ेगा ना, you will have to perform further checking. Thereafter, Shubham, I hope it is clear. Then I asked you, Rohit, you asked me query, I hope it is clear. Okay? So then I asked you whether if the internal controls are weak, for example, with respect to sales processing, the internal control are weak. So should the auditor only go by performing analytical procedure? Students are saying no, and the correct answer is no. Why? Because if the internal controls are weak, auditor will obviously like to check in the transaction in detail. Okay? Because the risk of material misstatement increases. So this was our first topic, suitability of analytical procedure. Then is then I told you that while considering the analytical procedure, auditor will see whether the data on which he has to apply the analytical procedure, whether that data is reliable or not. And students, we have done this in our chapter number 3, if you remember, that it depends upon the source of data. Tell me, if the information is received from independent source, is it more reliable or less reliable? Quickly write more or less. So it is more reliable. So it says, see, if the data is reliable, the auditor will have a confidence on this data, and since analytical procedures are applied on this data only, he will be confident about the results of analytical procedures. So reliability of data depends upon the source. Also on comparability of data. What is comparability of data? It is nothing but disaggregation, which we have just discussed. Factors may be discussed now about the reliance wala topic. Then it depends upon the nature of data. Let me explain this to you. Suppose you are comparing the actual with the budgets. So if the budget is properly made, then only you will rely on this data now. So budget should be based on your expectation that considering the situation, this is the expected result. You will compare the actual with the expected. However, take a situation where budget, the figure of budgets contain the situation what the company wants to achieve. See, what is expected is a better budget as compared to what the company wants to achieve. Company can want to achieve 100 crores as turnover, but considering the situation, what is expected that company can achieve 50 crores. So if the nature of data, that is budget, is based on expectation rather than on what the company wants to achieve. Want is never ending. Na company may want to achieve 100 crores, but it is not possible considering the situation. So budget should be based on expectation. This is one of the example. And last, this is a total repetition of our chapter number 3. If the data is obtained from internal source, auditor will see the controls over what? The preparation of information. And it says auditor should check the internal control on the financial information as well as non-financial information. Why? Because in analytical procedure, auditor is considering non-financial information also. So simple, this is just a repetition from our chapter number 3. Okay? Now, third point. Developing an expectation. Now, auditor ने पहले देख लिया that whether analytical procedure is suitable or not. Then he saw that whether the data on which he'll be applying the analytical procedure, whether that is reliable or not. Clear? Now auditor will, that is done. Now he will develop an expectation. Here basically auditor is saying that whether it is possible for him to develop an expectation. Ma'am, what is meant by that? See, it simply says, suppose you want to check the GP ratio. You want to verify the GP ratio. Either to developing an expectation is possible. You will see last year it was 10%, 11%, 12%. This year I am expecting 13%. This is fine. Okay? Now tell me, suppose last year there was R&D, research and development expenditure. Last to last year there were no R&D. Is it possible to develop an expectation here? No. Either to you will have to perform test of details. So whether an expectation can be developed depends upon three factors. First is what? Whether your information is segregated or not. If information is not available, the segregated information that you need, that is not available. Can you develop an expectation? No. Second is whether the reliable data is available or not, financial, non-financial. If reliable data is not available, see, suppose if this data is not available, can you develop an expectation? No. So, second factor is development of expectation. And third, whether an expectation can be developed accurately or not depends upon what item you are going to check. If you are checking GP ratio, it can be developed. Example. On the other hand, if you are checking research and development, it might not be possible for you to develop an expectation. Simple. Now, first was what? Auditor will see the suitability of analytical procedure. Second is he will see the reliability of data. Third is he'll develop an expectation. And while developing, in this point, what we are discussing, auditor will see whether it is possible for him to develop an expectation precisely. What is meant by precisely? The dictionary meaning is accurately. And that depends upon three factors. One is whether the information is segregated or not, whether reliable information, both financial and non-financial, is available or not, and third, what kind of data he is going to use as source data. For example, GP ratio में तो prediction is possible, but R&D या building वगैरह में anything like that is not possible. And last but not the least, if you remember, I told you that auditor will see what is the acceptable difference. Suppose while developing an expectation under SA 315, auditor thought that last year these were the GP ratio and I'm expecting 13% as the GP ratio this year. Okay? But this is just an estimation. This is just an expectation. It is not possible that actual will be exactly the same. So auditor may say that if it comes out to be 12.5% or 13.5%, it is fine. Or let me just change this example. 12, 14. Auditor is expecting 16% GP ratio. Let's say. Okay? But auditor says even if it is 14% or even if it is 12%, 18%, this difference is acceptable without further investigation. What does that mean? That if this is the actual, then this is acceptable. Auditor may not do further investigation. However, beyond this, if something happens, then auditor will perform further audit procedures. Simple. Also, quickly tell me, if the assessed risk of material misstatement is high, tell me whether this difference will be more or less. Assessed risk of material misstatement is high. Okay? Tell me, auditor will keep this acceptable difference as high, more or less. Quickly send me your replies. So auditor will obviously keep it at less. Why? Because if the assessed risk is high, auditor will not accept even a difference of 1%. He'll then check everything in detail if he feels that the assessed risk of material misstatement is high. So this was another topic. Let me just take you through the module and you'll be able to link what we are studying. See, analytical procedures are substantive procedures. So basically, when auditor under SA 330 decides to use these analytical procedures as substantive analytical procedures, first of all, he'll determining the reliability, the suitability of analytical procedure. Then he'll see the reliability of data. He'll develop an expectation, and he will see the difference which is acceptable. What is acceptable difference? That the difference which is acceptable without further investigation. If you want to learn it now, I call it as S-RED. S for suitability, R for reliability, E for expectation, and D for difference. Anushka, please see your answer. This is not correct. So first of all, he'll determine the suitability, then he'll determine the reliability, then he'll develop an expectation, and then he will see the difference. So what are suitability? What we saw that analytical procedures are generally more applicable to large volume transactions that are predictable, and it is based on the expectation that the relationship among data exists. However, suitability of a particular analytical procedure will depend upon auditor's assessment of how effective it will be. However, in some cases, even unsophisticated predictive model. What is unsophisticated? Simple. Predictive is what? Estimation. So it says that in some cases, simple calculations will give you result with high degree of accuracy. Let us try to understand this. If an entity knows the number of employees and the fixed rate of pay throughout a period, it may be possible for the auditor to use the data to estimate the total payroll cost with high degree of accuracy. This we are talking about this unsophisticated. Thereby providing audit evidence of significant item, reducing the need to perform test of details on payroll. Auditor saw that, if I multiply the amount that I'm getting is reflecting in the P&L. So auditor may avoid performing the test of detail. However, gross profit margins can often be used effectively in substantive analytical procedure to provide evidence to support the reasonableness of recorded amounts. Uske baad auditor might feel like checking the P&L items, but this will support that whatever has been recorded in P&L is correct, right? So see, this we discussed that if the controls over sales order processing are weak, this is important. I have given this in your MCQs also and in your case scenario also. The auditor may place more reliance on test of details rather than on substantive analytical procedures for assertions relating to receivables. This says that with respect to rights and obligations, you may perform test of details. With respect to your collectibility, you will have to perform test of details. However, with respect to your measurement assertion, you may apply the analytical procedures. Now, reliability. So, reliability is influenced by source. Example, independent source, it is more reliable. Comparability is what? Specialized products. This is what? Segment-wise information. Okay? Then nature and relevance of information. I told you that budget should be established based on what is expected rather than as goals to be achieved. Goals to entity can set any goal. Entity say wants to achieve 100 crores. But based on the situation, only 50 crores is expected. So budgets based on expectation are better as compared to budgets based on what the company wants to achieve. And last but not least, controls over the preparation. And this talks about that control over financial data as well as non-financial data. What is this? It says that auditor will here see whether it is possible to develop an expectation precisely. What is meant by precisely? Accurately. And it depends upon three factors. What are those? The accuracy with which expected results can be predicted. For example, with this example, it will be more clear. The auditor may expect greater consistency in comparing gross profit margins from one period to another than in comparing discretionary expenses like research or expenditure. Then the degree to which information is disaggregated, with this we have already done, and the availability of reliable information, both financial and non-financial. Then what is the amount of difference? Basically, auditor will decide that, since he is just estimating, so he will decide acceptable difference. Now, what is acceptable difference? The auditor's determination of the amount of difference from expectation that is accepted without further investigation. This is what the definition of acceptable difference. That this difference is acceptable without further investigation, and it depends upon materiality. Obviously, if any item is material, auditor will not accept any difference. Hana? And the desired level of assurance. SA 330 says the auditor to obtain persuasive audit evidence. So it says if the assessed risk, the risk of material misstatement, if it is high, obviously the amount of difference considered acceptable without difference decreases. Right? Clear? Now, only 2 or 3 topics are left in this chapter, and I'll try to cover these up, and we'll take the assignment parts on Wednesday. Now, the next topic is, if you remember, when we started discussing about the definition of analytical procedure as per SA 520, we saw that it is the evaluation of financial information through analysis of plausible relationship among both financial and non-financial data. Then I said that this definition also includes investigation. So the next topic is investigating. Investigating what? Investigating what? If there is any what? Identified fluctuation. If there is a difference you identify. If there is certain inconsistent relationship. And what was the last one? This we have done now. If there is significant difference from expected amount. Expectation can be auditor's expectation, or it can be the budgets or forecast given by the management. So what will do? Will the auditor ignore it? No. Simple. First of all, there is a difference. First of all, who will be your first point? With whom will you discuss? Quickly tell me. With whom will you discuss this matter? Will you straight away give an opinion that the financial statement do not reflect a true and fair view? No. We are giving an expert opinion. First of all, we'll discuss this. With whom? Quickly send me the reply. We will inquire management. Management will say something. Management will give some response. With respect to that response, we will obtain audit evidence. I'll explain this to you with the help of example. Traveling expense, last year, if I look at the trend, there has been a 10% increase in the last few years. But this year, there has been an increase of 20%. So this is what? This is identified fluctuation. Okay? I'll inquire management. While I was analyzing the traveling expense, I saw something unusual. I saw that this year there has been a 10% increase. Management will say, auditor, now management is giving the response. Auditor, this year we have entered into a merger and acquisition with a company which is in Australia. And to finalize that deal, our directors have visited Australia a number of times this year. So that is why there has been a 100% increase in the, there has been a 20% increase in the traveling expenses vis-a-vis 10% in the last years. Now, I have inquired, I have listened to the response, I'll obtain the audit evidence. that acha, give me a list of all the tickets, give me a list of whatever was discussed, give me the agreement of acquisitions and mergers. So this way. Clear? I hope this example is clear. So first of all, I discuss, inquire with the management, I'll consider the responses, and with respect to those responses. As a Todina, that management said that we have gone and you will believe. You are expert, you are auditors, you will obtain audit evidence. Okay? Now suppose when you inquired the management did not give a response. Management said, I don't know. I don't know about that. ऐसा तो कुछ नहीं हुआ, same ही होना चाहिए. So management is unable to provide you response. Or management gave you a response. Other procedures can be auditor will perform test of detail, auditor will obtain written representation, it can be anything. Simple. When there is an identified fluctuation or inconsistent relationship or significant difference, then don't just ignore it. Auditor, investigate them. Inquire management with respect to the responses, obtain audit evidence. If you management do not provide the audit responses, or if you receive the response and you obtain audit evidence, but that is not adequate, then you need to perform other audit procedures. So clear? So if you remember, students, we started this topic as the use of analytical procedures as substantive audit procedure. That is during the testing phase. So planning me, there was a short paragraph which was done that it helps the auditor to obtain an understanding and all. Then whatever we discussed as substantive procedure is basically the testing phase. Now the last is completion phase. That is while developing the overall conclusions. I'll take this topic. Why? Because I've already explained this to you. That basically here, what is auditor doing? He is just seeing whether whatever was his expectation, whether it is consistent with the financial statement. See, suppose auditor has applied analytical procedures with respect to various items of financial statement. Now, when he has applied analytical procedures on various items of financial statement, suppose he calculated it with respect to the the depreciation, he calculated the interest by applying analytical procedures, he calculated the traveling expenses, he verified the traveling expenses by applying the trend analysis. So when he has applied different techniques of analytical procedure to different items, now once he is sure about the various components of financial statement, this will obviously help the auditor to give an overall conclusion about the financial statement. And last it says that suppose when you were forming an overall conclusion, right? So you were expecting when you were performing the analytical procedure as risk assessment procedure, you thought that your GP ratio should be 14%. Now it is coming to be 10%. So it says if there is certain difference, then you may revise your assessment of risk of material misstatement. Because when you were performing risk assessment procedures, what was auditor doing? He was identifying and assessing the risk of material misstatement. Now this difference has come, then it says revise this and perform other audit procedures. With second point, students, you want to explain again. Vanshika, Rohit, quickly tell me. Where was my voice muted? Quickly tell me with second point. Meanwhile, while making the overall conclusion based on which the auditor will be giving his opinion, analytical procedure will help the auditor. How? It says that for each and every item, auditor applied analytical procedure. After applying analytical procedure to various items of financial statement, auditor can, based on this, prepare his overall conclusion. And lastly, it says, While drawing the overall conclusion, if there is any difference, then the auditor may revise the risk of material misstatement and he may revise his audit procedures. He may perform other audit procedures. Clear? So this was a simple topic. Overall conclusion. Second point, I think Rohit and Vanshika, you were saying when we discussed if there are fluctuations, then auditor will, if auditor has identified any fluctuations, investigation, so auditor will investigate. So first was what? He will inquire the management will give certain responses, he will obtain audit evidence. ऐसे audit management की बात नहीं माननी है. With respect to those responses, obtain audit evidence. This was first point. Second says that if management doesn't provide you with the response, management say, I don't know why there has been an increase in traveling expense, or whatever management says you are not satisfied, then perform other audit procedures. For example, you may ask for written representation from management, or you may check everything in detail. Okay? Then ninth topic we have also done. Last topic is consideration specific to public sector entity. Student, this topic is your homework. Public sector entities. And I have left one topic, purpose. Okay? These two topics, purpose and timing. Timing we have done. Purpose is simple. If you will go through it now, that we need to compare over time. Everything is there. So please go through these topics. And then with respect to your MCQs, case scenarios and descriptive, these plus your queries I'll be taking on Wednesday in the second half. That is, after the break, we will be discussing the assignments. Meanwhile, I want you to just go through these two simple topics. These are your homework. Abhi, I'll not end the class. I'll just revise whatever we have done in today's lecture. And Shubham and Abhishek, whatever are your query, I'll be taking them as and when we'll be revising. Abhishek, meanwhile, please send me your query again. I cannot see your query. Okay? So I'll just start just next 7 to 10 minutes. Okay? Your chapter is complete. Two topics, purpose of analytical procedure and the analytical procedure with respect to public sector. I'll brief these to you in the next class. As of now, these are your homework. And please go through the MCQs, case scenarios and descriptive. I'll be discussing these in the second half on our lecture on Wednesday. Okay? So we started our analytical procedures today's class by saying that with routine checking, that is test of details, whereby you are checking everything in detail, it might be possible that all the manipulations auditor cannot find. So auditor will have to perform other procedures also, which are contained in Essay 520. So what are analytical procedure? These are the evaluation of financial information. Balance sheet, P&L, everything is financial information. To evaluate, to usko hi karna hai. How? Through analysis of any relationship? No. Possible relationship among what? Both financial and non-financial data. Plus, it includes investigation of identified fluctuation, inconsistent relationship, or significant differences from the expected amount. Clear? Then we saw that it includes consideration of comparison and consideration of relationship. If I ask you example of consideration of comparison, it means you can compare the industries, the company's data over time. That is last year kya tha, usse last year kya tha. You can compare it with the industry data, or you can compare it with the expectation. Expectation can be developed by the management like budgets forecast. Expectation can be developed by the auditor also. What is considered in relationship? Relationship means that among various elements of financial statement, P&L and balance sheet item, see these will be financial items. Second is among both financial and non-financial, example, number of employees and your salary per employee. Okay? Then it says any method you can use. You can use complex methods like structural modeling, or you can use simple methods. Then we saw that when we are using analytical procedure as risk assessment procedure, that is covered in SA 315. When we are using analytical procedures as substantive procedure, that is during the testing phase, these are what covered in SA 520. And when we are using analytical procedures in forming the overall conclusion near the end of the audit, that is also covered in the SA 520. So from here only I related this topic to objectives. So objectives mean we saw that when we are performing the analytical procedure as substantive procedure, our objective is to obtain reliable and relevant audit evidence. And when we are performing them near the end of the audit, so we want to be sure that the financial statements are consistent with our expectation. If they are consistent, we'll form our overall conclusion that financial statement reflected true and fair view. If they are not consistent, we'll perform further audit procedures. It can be test of details also. Then next topic is purpose and timing. Purpose I have given you as a homework. This is a very simple topic and repetition of whatever we have done. Then timing, we saw that experienced auditor uses the analytical procedure at planning stage also, at testing phase also, at completion phase also. Planning may how will it assist? It will assist the auditor in obtaining an understanding, in understanding of entity, in identifying the potential risk, and in determining the entry of further audit procedures. Further, it says auditor needs to use both financial and non-financial data for applying analytical procedure at the planning phase. Then substantive analytical procedures may be saw that it depends upon number of factors. Availability of data, whether data is available, disaggregation, whether the disaggregation, that is segregation of data is there or not, segment wise hai ya nahi, so that auditor can compare segment wise. Account type, income statement which is predictable over time, you can apply it. Now there is a doubt, Charu is saying with respect to source. See, source means the source data on which analytical procedure is to be applied. See, if you are applying analytical procedure on purchases, sales, these are predictable, you can apply it. If your source data is on which you have to apply procedure, audit procedure, if this is research and development, this expenditure is not repetitive in nature, it is a significant class of transaction. What is significant class of transaction? These are important transactions for an organization, but these are not repetitive in nature. And we have seen that analytical procedure is suitable for large volume transactions which are predictable, repetitive in nature. So if you have the source data, that is on which the audit procedure is to be applied, if that is research or expenditure or advertisement, which is not predictable in nature, then you cannot apply analytical procedure. You will have to perform test of details there. Then predictability, nature of assertion. I gave you example of measurement, valuation, completeness. This so you can check by applying analytical procedure. Example, traveling expense may. You can see the measurement. Last year it was 10 lakhs, 5% increase should be there. But building ka right and obligation you cannot see with analytical procedure. Now you will have to apply test of detail. And last is inherent risk. If inherent risk is high, or if your significant risk is there, fraud risk factors are there, then obviously auditor cannot just rely on analytical procedure. He will have to apply test of detail. Clear? Then was what are the various techniques? We saw trend analysis, ratio analysis, reasonableness test, and the structure modeling. Trend is commonly used. Previous years we are comparing. If there is a difference, then understand the factors. And then it says that you are basically considering the account fluctuations. Students, quickly tell me whether you are able to understand this or not, whether this revision is helping you or not. Then is ratio analysis. It says ratio analysis you can apply for assets, liabilities, income or expenditure. The only condition is that there need to be certain relationship between the data with respect to which you are comparing the ratios. You can compare balance sheet or P&L item, and it can be compared over time. Ratio calculate kiya, you can compare it with the last year. Ratio calculate kiya, you can compare it with the entire industry average, or you can compare it within the segments also. Then reasonableness test. There was a doubt relating to reasonableness test. I'll repeat it. See, either now we are not using any previous year information. We are just using the non-financial data of this year. For example, we are saying that, acha, these are the number of employees, 100. This is the average salary per employee. So the salary should be near about 10 lakhs. Reasonable. Itna salary is reasonable. Itna interest is reasonable. Itna traveling expenses, fair enough. अगर इसके आसपास है, then it's fine. I will not check this in detail. So whether it is reasonable, the dictionary meaning for reasonable is what? Your fairness, and it is more applicable with respect to what? Income statement. You cannot say na itna building will be fine. Last year 1 crore ka tha, this time 2 crore will be fine. No, but you can always say ki last year 10 lakhs ka traveling expense was there. This time I am expecting a 5% increase. So reasonable hai. ठीक है. And basically reasonable test में क्या आता है? That you are considering non-financial data. That this is the number of employees. This it's the average salary. तो इतना salary is reasonable. This is the rent per flat, average rent per flat. These are the number of flats which are given on rent. So this amount is reasonable. ठीक है. And what is structural modeling? You need not go in detail. But you will see that it is statistical model whereby you are comparing the financial, non-financial data of prior accounting period and comparing it with the current year. Example, linear regression. You must have done this in your statistics in foundation. So analytical procedures, when you are using the analytical procedures as substantive procedures as per SC 330, first of all, you will see whether suitable, whether the applying of analytical procedure is suitable or not. Then you will evaluate the reliability of data. Then you will develop an expectation, and then you will decide what difference is acceptable without further investigation. ठीक है? So suitability of particular analytical procedure may we see whether it is more suitable for what? Large volume of transactions which are predictable and the relationship should exist. And it basically depends upon auditor's assessment. If he thinks that analytical procedure is effective, use that. Otherwise, do test of details. Then we saw that any unsophisticated predictive models, for example, simple estimations, number of employees multiplied by your average salary, then that may give you result with high degree of accuracy, and you need not perform test of details in test of detail. However, when you are calculating GP ratio, it will support the evidence with respect to the recorded amounts. You may need to perform other procedures. Okay? This was suitability. Please go through the entire chapter and more specifically the examples. This chapter will be clear to you only when you go through each and every example once or twice. Okay? Reliability, this is a repetition from chapter number 3 that it depends upon source of information, nature, comparability, that is disaggregation, and the controls over separation. That evaluation of whether an expectation can be developed precisely is accurately, depends upon your availability of non-financial financial data, your disaggregation, and third, on what data are you checking. For example, GP ratio mein to you can apply, yeah, traveling expense mein to you can apply analytical procedures, but maybe with respect to research and expenditure. Why? Because this is one-time expenditure, hai na? This is not repetitive in nature. Not one time, basically it is not repetitive, and it depends upon management judgment. So you may have to apply test of details. And last, what is acceptable difference? What is meant by acceptable difference? That the difference, you have developed certain expectation. Now you are checking the actual result. So what is acceptable difference without further investigation? Ki itna hai to theek hai, I'll not further check. And then it says if the risk of material misstatement is high. If the risk of material misstatement is high, so you will have a lower acceptable difference. Then if there is identified fluctuation, if there is inconsistent relationship or significant difference from budgeted or expected, then will you ignore it? No. You will investigate. There are two steps. First of all, inquire the management. Whatever response management is giving, obtain audit evidence. First is this. Secondly, if management is not providing you response, or whatever management provide you response and you obtain audit evidence, you are not finding it adequate, perform other audit procedures. Last, overall conclusion mein we have seen that auditor is applying analytical procedure to individual item of financial statement. So when this individual item, you are able to know that these are correct after applying audit procedures, you can form an overall view. And last, it says, suppose you developed an expectation in 315 about the risk of material misstatement, and while you were checking at the end that suppose you developed an expectation of 14%. Now you found that GP is actually 10%. That means there is something wrong, there is something unusual. Then it says then revise your assessment of risk of material misstatement. Then last is consideration specific to public sector. This I'll be taking. This is your homework, and I'll be taking your queries and the assignments I'll be taking in the class on Wednesday. First, we'll be starting with chapter number 9. And then second half, I'll be taking half an hour for this chapter. So, hoping that everything is clear to you. Still, if there is any doubt, you can send in your queries. I'll take them in your session on Wednesday. So please do send me your replies whether you have understood or not, right? So thank you and a good night.